Hello, this is David Bacaiso, Managing Executive for First Commonwealth Advisors. It's good to be with you again, and I hope this video finds you, your family, and friends healthy and safe. There's a lot of news to digest, just since sending out our quarterly outlook a week ago. Much of the news positive on the health front, and a lot of mixed signals on the financial markets and economic data front. I'm going to turn it over to Lloyd Johnson, Chief Investment Officer for First Commonwealth Advisors, to provide you with a brief outlook. Thank you, and have a great day.
Thank you, Dave. And it's really good to be back with everyone. I believe it's been a few weeks since we last reached out, and at that time suggested that it was likely that we would see some significant change coming over the next several weeks and months. And boy, has that been the case. A lot has happened since we last talked, both good and bad, in our markets, in the economy, and really in our everyday life. So we thought it made sense to talk about both. And at the end here, we'll have a couple charts to wrap up and summarize. So first of all, let's get the bad news out of the way first. In our economy, we have seen some numbers come out over the last few weeks that weren't great. Industrial production, retail sales, for example, negative as expected. Sometimes a little bit more the consensus and sometimes not. But probably the biggest headline grabber has been the unemployment claims, which is a weekly number. And so we've had 4 data points since we last met. And that number has totaled over 21 million in the US alone, unemployment claims. And that's probably not one that's likely going to change a whole heck of a lot. We'll have another one coming out this Thursday. Now, in the markets, it's been quite the reverse. When we last talked, the market from the S&P 500 made a low March 23rd, which represented a 35% decline from the highs we made on February 19th. Since then, since March 23rd, we've rallied over 30%. That's the kind of change we've had here in the month of April. So let's get to a couple charts and then we'll wrap it up. The first chart looks at the S&P 500 from October 2019 through present, shows how we had made that high in February, the resulting dramatic sell-off in the last half of February in through March, and the equally dramatic rally from March 23rd to present. We think this second chart's a really important one because it looks at a typical 60-40 stock bond allocation and how that equity allocation changes over time if left alone and not managed. And as you can see, it changes dramatically right before the dot-com bubble of 2001, again before the Great Recession time frame of 2008, and again here recently at the end of 2019, approaching 80% equity allocation when the client was looking for a 60% allocation. That's what he started out with. And so it represents they have a lot more risk if a down move does come. And finally, the last chart compares a typical buy and hold portfolio versus one that is managed appropriately, rebalanced. And you can see a couple things. One, that the maximum drawdown is a lot less in the portfolio that is managed and rebalanced appropriately. And maybe most importantly, the time it takes to get back to even is a lot less in the portfolio that is managed and actively rebalanced. Well, we hope that you found some of that information useful. It's the kind of thing that we do for clients on an ongoing basis. I'm sure there'll be a lot of change between now and the next time that we talk. So please don't hesitate to reach out if we can help in any way. Thanks.